Good afternoon, everyone. On behalf of KPMG, I would like to welcome you to the first webinar in our tax leadership series. Our leadership series is aimed at senior execs and will focus on significant issues impacting businesses. COVID has certainly refocused our minds on many things, and an emerging priority is how digitally enabled businesses are. Today's webinar is focused on how revenue authorities and businesses are using technology and, importantly, where things are headed. We will also discuss the operational efficiencies and improved decision-making that can be delivered by embedding technology into tax functions and where transformation opportunities may arise. The Irish Revenue have clearly embraced technology. They have co-authored a number of OECD papers on it, and we are seeing the fruits of their investments, most notably in PAYE modernisation, online filings, iXBRL accounts, and in the analytics and insights that these investments have enabled the revenue to achieve. So to discuss how global are looking to leverage technology and how businesses can fully utilize data and technology, we are delighted to be joined by our US partner, Brad Brown, KPMG's Global Head of Tax Technology and Innovation. From our own parish, we have our Tax Transformation and Technology partner, James Kelly, and our Tax Transformation and Technology lead, John Curry, to discuss what we are seeing in the Irish market. The format will be a short presentation from John, which will be followed by Q&A moderated by James. Please send through any questions that you have as they come to you using the Q&A function, which you should find at the bottom center of your Zoom window. The questions will come directly into the panelists, and we'll do the best to pick up these questions in the Q&A, but if we don't get time to answer all of them, we'll respond to you directly afterwards. So with that, I will turn matters over to John to kick things off. Thanks. Over to you, John.
Thanks, Tom. Before taking a deeper dive on how tax authorities and businesses are leveraging technology, we wanted to first of all position this discussion in the context of three mega trends we are seeing through the lens of the tax gap facing governments globally. Traditionally, the tax gap was the amount of tax that was perceived by tax authorities as being collectible versus what was actually collected, with the delta being down to errors by taxpayers, non-compliance, etc. In a post-COVID world, we should also factor in and consider that governments will now be faced with increased budget deficits driven by declining tax receipts, as well as increased expenditure on COVID supports in their local economies. The first mega trend we are seeing is the increased use of data and analytics in controversy or audits with tax authorities. Data is now proving to be the new battleground in these interactions between tax authorities and taxpayers. Secondly, what COVID has taught us is that those businesses, and indeed the tax authorities that had invested in technology, are proving to be much more digitally resilient and adept to working in this new environment. Finally, we are seeing a shift towards consumption-based taxes, with the proposed digital services tax being the most topical. These taxes are somewhat clearer from a decision-making and data audit trail than traditional taxes such as corporate income taxes. Tom mentioned in his introductions how tax authorities are leveraging technology, and we wanted to briefly explore why this is the case before we take a deeper dive with Brad and James. The benefits to tax authorities range from tackling non-compliance, which is the case in Finland, where the tax authorities have access to photos taken at ATMs, through to tax authorities essentially having live feeds from taxpayer systems. And the impact of this is that there's increased levels of tax compliance and tax revenues for administrations that introduce these types of changes. More locally, HMRC have introduced Making Tax Digital in an attempt to reduce a 9 billion sterling tax gap. And if we look more locally again, from a revenue perspective, revenue exceeded their target of an additional tax take of 50 million on the back of the PAYE modernisation programme, and have set a target of 75 million for the introduction of real-time reporting for dividend withholding tax. If we think about the pace of change with regards to tax authorities embracing technology, up until 2012, we really only saw a handful of tax authorities that were embracing digital, mainly in Latin America. Since then, we've seen a dramatic increase in the number of tax authorities embracing the digital agenda, whilst the manner in which tax authorities approach this will differ, which in itself is a challenge to multinationals that operate in all of these jurisdictions. The objectives are very much aligned. What we are now seeing is the disintermediation of tax compliance, where tax authorities are more focused on the supporting data and transaction data than the actual return itself, with the end game being the tax authority sends you the return as opposed to the traditional filing of tax returns by taxpayers. We see this being clearly demonstrated here in Ireland with PAY modernisation. And as Tom mentioned earlier, the OECD also produced numerous reports on the benefits of technology. Worth noting that one of these reports was forwarded by Niall Cody, Chairman of Revenue here in Ireland. Switching gears somewhat, we wanted to briefly introduce what we are seeing in industry and how technology can support tax and finance functions before exploring this in greater detail with Brad and James. We've set out below the 5 key priorities identified by tax leaders in our last global tax benchmarking survey and align these priorities with some of the technologies being deployed by clients. Firstly, on the risk management side, we are seeing the increased use of data and analytics and workflow tools. Workflow tools were historically deployed in large shared service centres, but we've seen COVID drive increased demand from businesses that are looking to manage tax processes such as compliance in a remote working environment. DNA can validate tax compliance by providing additional assurance on supporting data and in turn mitigate against the risk of fines, penalties from tax authorities. Workflow tools as well as automation tools are delivering a great deal on the process standardization front. We're seeing increased use of tools such as Alteryx to deliver benefits to taxpayers in this space. With regards to consulting or with the business or that business partnering objective, we're seeing increased use of DNA and modeling techniques where tax department can add increased value to the business. This modeling may be around cash tax positions, impact of seismic events such as Brexit, or even identifying opportunities for underclaimed reliefs or recoverable VAT. Unlocking tax value from data is a tangible way in which tax teams can add value to the wider business or specific operating units. On the data front, we do have to acknowledge that tax teams, in particular in Ireland, do have challenges with data coming from the business, especially for compliance and provisioning processes. Whilst there are businesses that are deploying third-party compliance and provisioning tools, we are also seeing businesses looking to improve their existing ERP or financing system to bring improvements here. Finally, on the paperless or remote working front, COVID has forced us all to adapt, and those businesses that had invested in cloud, collaboration, and workflow tools are proving to be much more digitally resilient in this new world than those that hadn't.
Okay, thanks, John. So we're going to have a little bit of a panel discussion now. Going to be joined by Brad, John and myself. Brad is based in LA, so we thank him for getting up nice and early to join us. As Tom mentioned at the outset, please share any questions you have either through the Q&A function or indeed through the chat function. We're also going to have some polling questions as we go through this session. We're going to share both the outturn of those polling questions along with the playback of this session with everyone tomorrow around this time tomorrow. So Brad, maybe just to kick off with you. You have a global role. You see everything. Clients around the world trying to embed innovation and technology into their tax function. How are you seeing technology and data transform how tax authorities operate?
As it relates to, I'm sorry, James. As it relates to tax authorities?
Yeah.
So I think John did a nice job laying that out up front in his intro. You're seeing a bit of a perfect storm emerging. If you look at the mega trends with respect to the use of DNA within the regions, the movement away from direct as a primary source of tax revenue, and really the sort of geopolitical environment of fairness in tax across jurisdictions, it's heating up the use of technology in a big way. And it's probably interesting just to step back for a second and think, kind of ask ourselves, why is this happening? And so we do a fair amount of looking at disruptive models. And right now, I think we're in the super disruptive cycle. And the framework we use is something called the PEST model, looking at political, economic, social, and technology disruption. And if you think about those four things in our current environment, they're all in a highly disruptive phase. So oftentimes you'll have one sort of going on. Now you have all four. I mean, obviously political, with this notion of equity and tax. Some countries like my own using global trade and customs as sort of a political weapon. The notion of Brexit and sort of what's happening with OECD and the EU and even Irish revenue. It's a highly charged environment. And then economically, obviously, we're coming to the end, presumably coming to an end of a boom economic cycle. So along comes technology in that construct. And we all can recognize, for those of us that are a little older, the arc of change with respect to technology that's in our hands today is so much more powerful than when we started our careers. You know, in the last 10 years, cloud has come on scene and made a big difference. The fact that we're all walking around with what used to be a supercomputer in our pocket with our Androids and iPhones. And then finally, in the last few years, the emergence of AI, artificial intelligence. So we're not the only ones with this cool technology. Now that the tax authorities are accessing it too and saying, hey, what an amazing way to sort of change the way they're doing things. So, I'm sure you're all seeing it in your market. As I look at other markets, you're seeing a rapid change in sort of the agenda of tax authorities to lean into these technologies to kind of to address the disruptive market. Rapid, sort of very intentional skill set. So on two fronts, very intentional skill set changes. You're starting to see sort of technology geeks like me work themselves into revenue authorities across the globe, and you're also seeing investments in underlying technology platforms, sort of unlike we've seen before. So again, all in reaction to this super disruption cycle. I think the challenge for many of us and those on the call today is probably the lack of uniformity in terms of how that's hitting. We're in the beginning of this transformation as it relates to how the tax authorities are starting to interact with us. And John started nibbling around the edges. Again, in my travels around the globe, it's very interesting in terms of the disparity, in terms of how they're getting folded out. The Latin American region, very early on, huge business case in terms of tax gap that they had to close. And so you saw them trying to find ways to move away from being reliant on sort of honest self-assessments of tax and get in the middle of supply chains and e-invoicing. So really, they were the first mover. And again, John's slide did a nice job of showing that. But I would say the region with which you live in was a fast follower. Initially, through my lens, you saw a big focus on the audit cycle. So from a tax revenue, how do we do audits more efficiently? I would say the EMEA region was the first to really embrace a lot of the data and analytic tools very early on. And now you're starting to see them add to that the repertoire associated with Latin America in terms of interjecting further up in the cycle. And then interestingly, Asia Pacific is in kind of a different spot in terms of they're really trying to get real-time self-assessment. They are first movers outside the indirect tax space. Essentially getting self-assessment at the individual level and even the small corporate level. So they're interesting. And finally, North America, surprisingly, is kind of the laggard from a tax authority standpoint in terms of leveraging the tech. Instead, they have relied more heavily on information reporting, forcing taxpayers to get more transparent and spend their time in matching. So again, you see four regions sort of moving in different ways, but undeniable that they're all moving in the same direction. How do I lever technology to sort of balance the trade gap?
That's very insightful, Brad, and I think that global perspective is important to clients. With people on the line that have businesses throughout the world. John, maybe just to localize it for a second, do you want to maybe just talk about the Irish revenue, as Tom mentioned, have been at the forefront in this space. Do you want to mention the trends or go through the trends we're seeing here locally?
Yeah, thanks, James. I think to maybe just pick up on Brad's point with regards to the types of individuals being hired into tax authorities. Revenue would have hired in quite a senior DNA lead, a chap called Dan Sinnott, that would have rolled out a lot of revenues analytics types program. Interestingly, when you look at revenues annual report this year, there's some interesting statistics in there that the actual number of audits have decreased, but there isn't a corresponding percentage drop in the tax take or what's coming out of those audits. There's also this point here locally around tax authorities have all of this data, but can they really bring it together? I think what's interesting as well is Revenue have invested in a data lake, and we see the queries or the audit interventions coming in from Revenue, and they are clearly joining the dots with regards to all of this different information that's available for them to do two things. One is to target specific taxpayers for audits or interventions, or secondly, when that audit or intervention happens, to ask some really clever questions.
So you can't socially distance from the Revenue anymore to have your data.
Yeah, that's a fair point.
And that point, Brad, before we move on, just, global tax authorities in the last number of years have collated a huge amount of data. They've got CYC reports, BACA, IXBRL, third-party reporting, CRS. I could actually keep talking. Like, are they going to figure out what to do with it and how to really drive audit behavior and taxpayer behavior using that massive amount of data?
I mean, so my short answer would be I believe that they will. So it's funny when you look, I have a very innovation bent and look at innovation cycles a fair amount. And the repeating pattern that you'll see is we tend to, when we look at these changes, we tend to think that they're going to happen faster than they do. And when they don't, we start to discount that it's going to happen. And in fact, what really happens on the innovation cycles is it takes longer to realize, but has a bigger impact than we originally thought. I think you can apply that sort of that academic research in this space, in my opinion, is the incentives are too great for them not to get this right. And the tool sets are becoming so prevalent that, I could argue they're doing the exact interesting thing. Right now, all of the information reporting and different filings, and again, this is what I see in North America, getting this framework of requirements that are allowing them to get more data. Yeah, it's going to take them a little bit longer to figure out how to get the foundational technology and the analytics to unmask sort of the interesting things to see, but they are definitely going down the path to get the most important layer, i.e. that data. So in short, yeah, I think they're going to get there. It's just probably taking a little longer than we expected.
To deal with the topic of the day, I suppose we've seen unprecedented fiscal stimulus pumped into the global system, with everything from wage subsidies, tax deferrals, the much maligned helicopter money in the US where governments are pumping money into the system. But that's all going to have to be paid for. And governments are going to have to figure out pretty quickly how they're going to pay for it. And I wonder what your perspective is on how governments might approach that, and in particular, whether they might look or try and mine that pool of data that they have to see if there's additional revenue, new taxes or whatever in there. Be interested in your global perspective in that, Brad.
Yeah. So I think similar themes. I think it's going to be a 1-2 punch from where I'm sitting. So the commentary outside Ireland, and it's particularly strong here because of how aggressive Treasury's been in the U.S. So the 1-2 punch. I think the first punch will be laying down. Continue to migrate the types of taxes that they chase. And oh, by the way, the types of taxes they chase are going to be easier to administer. So I think that's the first avenue. And the second avenue is, back to the previous discussion, I think that they're going to do a better job of using technology and analytics to understand, what they're trying to assess. And it's kind of interesting. It's a bit dated now, but I think that you could apply it. It was in the summer of 2016, and the OECD put out a series of tax administration papers, and one of those was particularly telling. And I don't know how much your community reads these, but it's a fascinating read. It was the Advanced Analytics for Better Tax Administration, I think was the title. And interestingly for you all, Irish Revenue was featured in there in terms of their use of data and analytics to drive, either reduce the tax gap or drive revenue. They had set up this revenue analytics group, and I'd be interested to hear from John in terms of how that's playing out. But I think that that's a representative example of what we're seeing, because obviously the COVID checks that countries are cashing are immense. So yeah, short answer. I will say that digital matters, and again, you see disparity across the globe in terms of how much they're able to chase. Doing physical audits right now, at least, again, I've been locked in my house lately, but in the U.S., physical audits have ground to a halt. But interestingly, in the pockets within the U.S. Taxing administration that has digitized itself, those have been ramping up. So you sort of see physical going down, and sort of the digital, hey, give me a bunch of data and let me parse through it, is going up, which I think, again, starts to foretell the future on this a bit. So short answer is yes. I think you'll see the movement to the other types of taxes, transaction, digital sales tax, and increasingly, stuff that's more pointed, that's easy to administrate, and I think the increased leverage of data and tech.
Yeah, and maybe John, thanks, Brad. John, just to pick up on a point there, like as you mentioned earlier, Irish revenue are seen near the top of the pack. What are we seeing? How they're using this data to generate new opportunities and maybe identify some of the tax gap you talked about earlier.
Well, look, a range of means. One, they have a kind of an assessment program which directs interventions towards certain taxpayers. And, we've basically seen interventions from revenue, which basically indicate that per our information from the UK tax administration, we believe you have X reported, but our records show it's Y. So again, that kind of concept of big data, being able to leverage multiple data sources. I think you also mentioned there, James, earlier on with regards to some of the incentives, et cetera, that have been put there. If we think about the TWSS and all of that, let's think about the data sources revenue have. They have all of the real-time reporting or payments to employees. They will, over time, have access to IXBRL filing, which they'll be able to compare turnover, drops, et cetera, to ensure that a business actually qualified for the TWSS regime. So, in theory, by coupling that with the investment that they've made in a data lake, they've essentially put all the pieces there together to automate those interventions of that compliance. And that is absolutely something we're seeing on the ground with regards to the breadth of queries that revenue are coming into us with, as well as even getting as sophisticated as, hey, you run SAP. Here's an ABAP that's basically a piece of coding. Here's an extraction program that we'd like for you to run on your SAP system to give us the data. So again, I would see revenue being very sophisticated in comparison to what we see in the UK, for example. Working with the guys in Belfast to support clients there, that the revenue would be very, very sophisticated on that front.
And I suppose we saw as well, even, take something like PYE modernization, John, where, I think revenue identified 100 million of a tax saving from that, but actually they also identified using, by comparing taxpayer income tax returns, company DWT returns, they identified an 80 million euro tax gap, I suppose, around how people are reporting dividends that they received. I don't think too many people are talking about dividends this year, but certainly, in the year, by just changing the DWT rate, they were able to plug a big part of that tax gap fairly simply.
Absolutely. So they're basically using the data to inform policy,
Yeah.
And that it's much, kind of goes to that modeling point we might have been touching on earlier, that it's not just businesses, but also tax authorities that are modeling with their data to maybe inform policy.
I think we've maybe sufficiently scared everyone. So the revenue have loads of data, they know all about you, and they're going to figure it out how to tax you. So let's maybe go in a slightly different direction. That's been maybe the somewhat downside of data, but clearly it presents significant opportunities for tax teams to transform their decision making. Brad, maybe we might kick off with you around how you're seeing companies, particularly tax departments and companies, transform their decision making using data.
Yeah, so I didn't mean to come off as Chicken Little, that the tax authorities have a leg up. I will say in some jurisdictions you see that, but I think generally, in my travels, tax executives within companies are very cognizant of this and are keeping up, if not continuing to exceed what the tax authorities are doing. So I didn't want to ring the alarm bell, but I do think that we're sitting on a burning platform. Because we know the direction of travel they're doing. As it relates to corporates, I would say, hey, this is a pretty cool time. In the last few months have highlighted again some interesting things in terms of where we're headed as a community. So the companies are starting to say, hey, but even pre-COVID, there was in the last several years, and it kind of varied by country and industry and size of company, but you already saw an increasing momentum to make this investment in digitizing their world, in technology and a focus on data. I never, every day I meet a tax person, data is sort of the fuel that makes everything work. So I think there's been this hyper focus on data. As a function, I think we all agree we have some challenges because we're not the largest creator of data. We're relying on the rest of the organization. And I think having lived through that, our entire careers, we're very sensitive to a hard part of this is data. So I have been seeing, again, over the last few years, heavy investment going towards that. As you take a snapshot and, to your question, how can companies use data to sort of make better decision making and make their lives better? There's sort of two pieces of that that's emerging for me right now. One would be sort of this notion of digital resilience, and the second is sort of digital value creation. And so the digital resilience is what's been interesting. Again, it's kind of in a tough way, but the last few months of having to disrupt our operating models with respect to COVID, you've seen those that have been investing in a bit to sort of digitize their tax operating model has had a much easier time of moving, dealing with this really bad backdrop of COVID in terms of data accessibility, paperless, ability to work remotely. So all of that is paying dividends, which I predict is going to help create the business cases for all of us to continue to invest and make change with respect to sort of our digital platforms for our function, which leads to sort of this notion of digital value creation. So tons of energy in terms of the data management lifecycle, and then combining that with sort of this notion of modeling and scenario based to get to your point about creating value. But we all will recognize, I think, you can't just start with this really cool model, because all the cool models are driven by, they're thirsty. They want a lot of data. So these are the two sort of big buckets that I've seen. And just to give an example or two in the current environment, we've worked with a lot of clients. So our firm, and I'm sure there's others out there, have created sort of these notions of opportunity calculators. So ours is the KPMG Global Relief Calculator. So assessing all of the legislation from around the globe and trying to figure out with each company's fact pattern which incentives to avail themselves of. Everyone's chasing, a lot of companies are chasing cash in the current environment, in addition to just, effective tax rate savings, but, cash has been king lately. And so we've had this, major drive to sort of analyze the rapidly changing global framework against company fact patterns. And what's been pretty clear, those companies that we've had a lot of companies that had invested in sort of that data layer, that now we can basically, rapidly look at a changing regulatory environment with sort of some business logic and calc, and married up with that data all remotely and quickly. And that's, driving, some pretty quick decisions in terms of where to avail themselves of opportunities. Similarly, a lot of folks have been working through the BEPS 2.0, the OECD Pillars 1 and 2, same kind of analysis, those companies that have sort of this data framework against these emerging models. So again, I think as companies invest in the data, you're going to be able to more quickly, both internally as well as work with your advisors, and sort of make these decisions on the margin about which of those ways you want to go to analyze data. So, I think we're coming into a really good time, James.
Yeah, thanks, Brad. And I suppose, John, Brad referred to data from a current company as a fuel, but there's some dirty diesel out there. There's people with poor quality data, unstructured data, people pulling data from different sources. Where should people start? What are we seeing Irish clients do well as a starting building block?
You know, it's a very fair question, James, because you know, I think people are sometimes afraid to take on this data issue that, you know, oh, it means looking at SAP or Oracle. That's just a massive six-figure project that's never going to happen. And you know, what's interesting is that, you know, in working with clients who do have a vision that they want to maybe automate compliance, they want to do some cool stuff on the analytics side, you know, the first point we will always try and do is to sense check, well, what's the fuel that's going to go into those machines? And, you know, what is kind of somewhat surprising is that you don't necessarily have to radically rewrite your ERP system. That you could make some incremental changes, for example, how you structure your vendor customer master data, how you structure your product files or your material groups, and your purchase catalog items that you might have, tweak a few reports, and you'll get to a very good result. You know, it mightn't be perfect, but it's something that's achievable. And you know, we've also seen that clients might have a wider enterprise-like business opportunities, such as in new finance systems. There's going to be a lot of businesses that are going to be upgrading to the latest version of SAP. And you know, we had a client recently, and they had really invested in their indirect tax setup for SAP. But when Making Tax Digital came, it was a nothing to them. They had to buy a little bit of reporting kit to be able to plumb into HMRC. So net of it, you know, I think we absolutely do need to take on that data challenge, and that it's not necessarily as difficult as it may seem. Certainly from a technology perspective, it's really about engaging with stakeholders in the business to try and achieve those changes.
Yeah, but John, one of the things I hear from clients is, look, my C-level don't want to be going through Excel spreadsheets. Models are really cool, but they just want to see the output of the model. They don't really want to know how to put together. Like, is there a better way to present that data, to focus on the key messages, to identify the key trends? What are you seeing around that?
Look, James, absolutely. We you know, when revenue would have upped their games with regards to e-audit, our approach, rightly so, was to leverage the same kit as revenue, which was IDEA, which is a great bit of kit. You know, it does the analytics, but it doesn't really present risk. So one of the ways, even which we've changed our approach is that we now add on a layer of visualizations, whereby you're essentially, rather than sending through reams of Excel spreadsheets, you're sitting with a client and looking at a pie chart and saying, okay, here's my overall indirect tax or employment tax throughput. Are we all agreed that our risk area is here? And then you maybe use visualizations to delve a little bit more into that detail. You then might say, right, so we've agreed that this is the area. We've ran some tests, and basically we've displayed our key risks areas in the form of a heat map using tools like Power BI, ClickSense, etc. And again, I think there's that mind shift. A picture paints 1,000 words, and you know, we're certainly seeing a mind shift change from, you know, doing analytics using a lot of these tools into actually how you present them, because that's what gets, to your point, the C-suite's attention and the ability to be able to try and drive some change to mitigate against these risks.
And I suppose, John, the current environment, there's nothing like cash to focus the C-suite. So, you know, the ability to identify, do a health check in your data, potentially, you know, identify tax depreciation, R&D, tax savings, you know, nothing like that to focus minds.
Absolutely. And the analytics, it'll point you in the right direction, James. You know, it might get you 100% there, but it's certainly a smarter approach.
Okay. Brad, maybe to move on from the focus on that, and just to, you know, you see everything from Fortune 500 companies to mid-tier clients to private businesses. You know, we have a broad range of participants on the webinar. How do they benchmark themselves against global leaders in tax transformation and technology?
Yeah, so this is often the initial question I get when I get called in to a client, you know, to a chief tax officer or CFO. And so really relevant question. I do feel whenever I start my response on that one is, as a technology geek, I'm obligated to start by pointing out where technology fits within the broader framework. And so it's almost like a Hippocratic oath that, you know, not everything's about, as much as I feel like it, not everything's about technology. So that benchmarking for me is really, I think, this notion of fit for purpose. And you kind of tease at that a little bit with your question, saying there's a broad range of companies on the line. I would even say, you know, even within a certain market cap or revenue size, there's vast differences. So you're different if you're financial, regulated financial services or utility company looks very different from a high-tech company that doesn't have some of those things going on. So I think first and foremost, I would say, as I look at benchmarking how companies are doing, I very much work that dialogue. So if I'm sitting in the shoes of the chief tax officer, working that dialogue vis-a-vis my company profile, our corporate strategy, our finance strategy, and then from there start to finish, figure out where should technology fit and how do I compare with the ones that are getting that right. So I mean, first and foremost, I think it's a nuanced exercise, and John kind of alluded to it a minute ago in some ways. Some companies will say, hey, it's awesome to start leveraging SAP or these enterprise systems to somehow make tax better. Whereas, that's not the real value or the real pain point, and instead, tackle something that is elsewhere, like a quick analytic. And so that's interesting. And so we mentioned Alteryx before, that is a good edge automation, edge data transformation tool that starts to provide value in some ways. So anyway, so point one size doesn't fit all, nuanced discussion. So benchmarking is challenging. So I think that's the first takeaway. The second interesting thing, and it makes sense when you think about it for a second, is sometimes the newer, smaller companies are actually in a position to really rock this because their data architecture sometimes is just a lot cleaner. And I remember, working with a company in the U.S. that's really large now. It's a digital platform business. But at the beginning, I mean, they had basically globally an Oracle instance with, pretty clean data, and the things we could do in terms of straight through processing was amazing. So in that context, I wouldn't say that, hey, when I benchmark, small companies look like, they're not quite as sophisticated and large or super sophisticated. I would say the cleanliness of some of these data and tech environments is almost, reversed. So again, sort of maybe counterintuitive at initial reaction that you think the big companies have more to invest. I think they're overcoming some more historic legacy challenges in some regards. So I think that's a bit of a nuance also to sort out.
And just to pick up on that point, right? It also, everything we've discussed sounds terrific, but it also sounds horribly expensive. And in the current environment, the CFO is looking at costs. How do you make the business case? Like where should you be focused, and how does a head of tax, chief tax officer make the business case in today's world?
Yeah, so I mean, I'm going to give it to you sort of straight here. There is a big number of companies that we work with that it's about survival. We talk about value creation and what we can do with this cool data. I don't want to minimize the fact that there is a survival population right now. We have been under this multi-year mega trend of do more with less, and at least in a lot of the companies and markets I work in. And so our jobs, as we know, just get bigger and bigger, more complex from reporting and compliance perspective, from an audit perspective. And now with COVID, we're the tax are the cool kids again in terms of the planning, right? So now we've also got the attention of the C-suite because they see us as potentially a cash, an area in which you can unlock cash. So, we're lighting up on sort of our three core functions at the moment, and probably juxtaposed for many of us, our headcount hasn't exploded. So part of it is the business case has become, if you want me to continue to manage the risk appropriately, continue to get my filing and be able to respond to sort of business partnering and planning, I got to lever technology. So there's a whole swath of companies where that business case is oriented on sort of survival juxtaposed with there's more to do. There is another subset of companies that have not, faced quite that existential threat of making sure they get all the work done. And those folks are leaning towards a value business case, James. And for that, again, I come back to this notion. It's going, where I've seen companies be particularly effective is going back to what's the company strategy, what's the finance strategy, how do I align to make those agendas more successful, and hook their technology projects aligned and supportive of the broader company. Again, sort of self-explanatory, but that's that seems to be sort of the two buckets that have emerged where I've been.
Yeah, that's really interesting. And I suppose to add to it, where you have in a world where companies are digitally transforming, they're changing supply chains, they're moving into new lines of business very quickly, partially driven by COVID. Now is probably the time to at least set that strategy, right? To have your roadmap, have your North Star, and then align your investments thereafter.
Yeah, absolutely. And I didn't say the word roadmap, which was I was remiss. I mean, that's sort of my first thing is set your there's two things that happen on, and it doesn't have to be a big and long investment. Set your North Star, and again, informed by sort of your environment and the company strategy. And then secondly, then figure out a multi-period roadmap. Again, not to be the dead horse, the really cool thing about the current environment is, again, years ago, I think a lot of folks would say, hey, this is a big, hairy problem that takes millions to get started, millions of dollars, euros to get started. And now I think we're in a different land. There are things around the edge where you can start to pick off some value and much smaller. Nobody wants to wait around for a long period of time to start to see value. And so that staged, phased roadmap, proving value along the way, has been a winning formula.
John, do you want to just comment from an Irish perspective, like how are Irish clients cutting their cloth at the moment? What are you seeing?
Look, I think what's very, very positive, and it kind of is along the lines of what Brad's talking about there, about kind of right sizing the answer. And we are seeing clients, again, looking at trying to get an understanding of what data is available, what improvements could they make to go out there. Like, I think it doesn't matter whether you're a Fortune 100 or a mid-sized business here in Ireland. To have well qualified tax people spending at the end of every month 2 or 3 days buried in Excel doing standard repeatable activities is not a good use of anybody's time. So again, we are seeing increased interest in tools that can try and automate these processes and make them more efficient. And people are, but admittedly, there is certain extent people are still in a bit of a firefighting mode as well, James. So it's trying to get that balancing act right.
All right. Brad, as a final question before we open up the Q&A, I suppose that one that always pops up. What does the tax function in the future look like? What's the technology platform? What are the skills and resources within the tax function? Will COVID-19 be a catalyst for real change? I might throw that over to you.
So yeah, I'll dust off the crystal ball. So on the last point, just to knock off the easiest part of that question, is COVID a catalyst for change? I would guess a strong yes on that. I'm seeing it now, that it's putting fuel on the fire that was already starting to burn and now it's starting to rage. So I do see the notion of business resiliency, the increased demand for planning, so that draws in sort of data and analytics in a big way. So the short answer on that's yes. To the broader question in terms of what does the future look like? Again, I'm a geek, I'll admit it, but I mean, I think we're entering a super cool, to the extent that we can get some airspace to move, again, the survival theme is there, I acknowledge. The art of the possible in terms of technology is just exploding. And so I think that is an enabler. Secondly, I think it seems like increasingly the broader corporate leadership is recognizing that we've been generally underinvested in the technology function, the tax function as it relates to technology. And so I think that's saying, hey, it's time to shift some capital in that regard, in that space. So I think both those things are wind in our sails. So where does it land? So I think right now, and I alluded to this a few minutes ago, we've been on this journey where some technology has been enabled. Cloud is a big part of it, and tax software has been, another explosive area. And so those are really, in the last 5-6 years, started to get interesting. Also, the enterprise players and SAP and an Oracle and a Workday. These companies are starting to recognize, hey, there's an untapped consumer in tax. So I think we've already been seeing sort of this birth of technology tools coming into tax or existing tools starting to aim at tax. So I think that trend continues. But I think if you really start to look out, I think there's a couple concepts that start to emerge. AI, artificial intelligence, and sort of what we will refer to as human in the loop. I think that is we're in the first innings of that game for us, and starting to see where you can take sort of some of that soul crushing work of going through massive amounts of data, starting to find, trying to look for that needle in the haystack, and fast forward that to the analysis phase. So, we've been leveraging IBM Watson as a firm, Azure Machine Learning, some Google capabilities, and you're taking out that lower end work right now and sort of accelerating the tax professional into sort of that analysis phase. So I think that is a trend that's just getting started, and I think that's going to be a multi-year trend where you start to see that. So I think that's cool. And the other big wave that I think is coming is sort of this notion of citizen developer. So the cloud and some of the tools I talked before has unlocked this incredible value with software engineers to start to take their talents and aim it at tax. The next wave is, I think you're going to have this emergence of sort of the tax professional of the future able to use sort of these citizen developer tools. And we're starting to see those today, like Alteryx. What's behind, Alteryx is a data transformation tool. And in essence, it's making a tax professional a SQL programmer. When you're building these workflows, you're basically, compiling code. It doesn't feel like it, but you're compiling code. So you have this emergence of no code, low code, a suite that's huge. The Microsoft Power Suite, I think, is, changing us quickly, Power BI, but you're going to start to see in the next year or two something called Power Apps that starts to deal with sort of the data movement to tee up sort of the analytic and visualization side. So I think what you'll see is sort of this emergence of the tax professional of the future starting to become sort of almost like a pseudo software engineer. So you're really going to start to see the fusion in this skill sets. So I know I get a little excited on this, James, but I think it's a cool period in terms of how this is changing for us.
John, I want to bring you in on this one. Will Excel spreadsheets be the thing of the past, or are we transformative?
Sorry, Excel will always have its use. I think where people get rather frustrated doing the same thing month in, month out in Excel, scrubbing data, etc. That's just, so I do think for certain tasks, absolutely Excel will be superseded by some of the tools, for example, that Brad was talking about. So it's also worth noting that, Excel, for example, in the UK has essentially been taken away because of Making Tax Digital. So I think, absolutely businesses will continue to invest, but let's just not recap that the tax authorities are driving a great deal of this agenda. And at the end of the day, that's what Making Tax Digital was about, was trying to reduce the amount of manual intervention, let's just say, that was happening in tools like Excel in advance of a tax VAT return being submitted to HMRC.
Yeah, no, I think that's right. And Brad, do you think the cost of some of these tools are going to come down? That would have been one of the things that people would always identify. It's too expensive, and particularly, maybe very common in Ireland, you'd have 2-3 person tax departments, and there is that cost pressure there. Yeah, you talk about some of the Microsoft Power Suite, right? That is really a cost base. So do you want to just chat about that for a second, how the cost of some of this is going to fall?
Yeah, and this might be part of my excitement, to be honest. I think a couple things are going on. You have tools that can create value that are, thousands or tens of thousands of dollars rather than hundreds or millions. And so again, everything we talked about before is in that range. Getting Alteryx going, relatively inexpensive license, very short learning curve, and quick to value. You can build a workflow in hours or a couple of days, depending how complex. Same things happening, the cloud. We say cloud a lot, but that's enabling sort of all these tools. You and I can now do a little bit of machine learning based on Azure ML. And Google does a nice job of this too. So, and all those tools are in a totally different price range than they were before. So I would say we've already experienced there's avenues with which to go down that are accessible from a cost perspective. I think the harder question to answer, does the enterprise data warehousing projects getting cheaper? You know, is SAP, Oracle, the large tax software platforms getting cheaper? You know, harder to see that. You know, I'll say that I'm not feeling it yet, and so it's tough to predict. But the good news is there's a lot to do outside just solving that part. So I think it's encouraging. I will say there's also a business model shift going on that is impacted by your question. There's this notion of unbundling. So a lot of times when advisor and client have talked, it was very much a binary discussion. Do I want to do this thing in-house, corporate compliance, or a planning project in-house, or do I want to work with an advisor? I think what's happening increasingly is you're starting to see that project getting unbundled, and clients and advisors are saying, there's 10 things to do in that project. Let's split them. You do 5, I do 5. And sort of the technology platforms around collaboration, and I think John mentioned workflow a second ago, are allowing sort of that unbundling. So, okay, so why is that response to your question? In response, the firms are spending loads of money building technology platforms that are now essentially getting swept along, that when you hire an advisor, you know, you're getting access to the technology investment that the firms are making. So for us, it's around something called Digital Gateway. And so if we're doing something on the corporate compliance side, they're getting access to the investment we've made. And so they, you know, basically for the price of the 5 steps that they've outsourced to us. So I think that's another mechanism. I think the folks that want to build, the companies that want to build on themselves, there's lower end technology that drives value. The companies that are sort of interested in doing this together, they're starting to benefit from the large investment that the advisors are making. So I do think that there's a cost coming down, James.
John, just we might turn to the Q&A, and one of the questions, just to make a step back earlier in the discussion around the Irish revenue and their development, is around real-time reporting around VAT, the equivalent to Making Tax Digital in the UK. John, do you want to, any insights or updates on where that might be at from an Irish perspective?
So there was obviously a statement made, it's probably going back 9-10 months ago, from Revenue Now Cody, that real-time reporting for VAT is inevitable. I know we have brought it up at Talca in interaction with Revenue, and it's not in the immediate horizon. I think Revenue, as mentioned earlier, James, are focusing on dividend withholding tax. You know, the one thing that I will talk to, and it goes to that slide about the different pictures, you know, with regards to how the different tax authorities have brought in these changes. I did raise it with somebody senior in Revenue in a meeting about, you know, will you go down the Making Tax Digital route? Will you go down a SAFT route? What will your approach be? And they said, it'll be different and it'll be better. So, you know, I think that kind of does demonstrate that, look, tax authorities have their own agenda and risks that they need to manage. So I don't see it happening in the next 6 months, James, in particular with COVID, you know, businesses having to stand up. But it is something that will come, you know, over time.
And Brad, just a question. We've talked a lot about tax functions in the discussion, but there's clearly a lot of other stakeholders in these transformation type projects in getting better data. You know, finance, HR, IT, the C-suite, the board of directors. Someone on the Q&A has quite rightly pointed out that, you know, things like GDPR, privacy issues have come up. How do you handle those? What's a good framework for handling those stakeholders, dealing with them, bringing them on that journey with you as a tax department?
Yeah. So to state the obvious, I think it's a very intentional, you know, it's a very intentional process, and you know, we do stakeholder mapping. So essentially, we try to figure out the nature of the project, and each project may engage different parts of the broader organization, and essentially develop a change management plan that's based on the stakeholder mapping, which again goes back to that framework I was talking about before. Figure out sort of the direction of travel of the company strategy and the finance strategy, but you could add IT strategy, HR strategy, and so forth. So totally agree on that. It's got to be intentional. We've had instances where that's gotten so strong that sharing our objective of you know, addressing a tax and the data and analysis that's required for that has gotten another group excited, where they then co-fund with the tax function that say, hey, we want that data. So there was, a transactional. So as an example, in a number, there's a transactional tax that required you to create a lot of supply chain, the movement across the supply chain, and the ultimate revenue. And in those projects, we started seeing that the business got very engaged, that we started to get the ability to do analytics about the supply chain movement that got them excited. So, I think it's defensive at one state that you got to bring them along for the ride, but I also think it's an opportunity to figure out where there's shared interests and maybe hopefully get maybe some joint voices into challenging that. In terms of the privacy and GDPR, again, not to be a broken record, thorny, hard issue. Acknowledge that up front. I think it's it's the keep me up at night is this juxtaposition is the tools and the data movement in the cloud have gotten so easy to collaborate with broader teams, both geographically and organizationally, which is awesome. But it's in this backdrop of increasing data privacy and residency rules, which is a challenge. I'll say it's been much easier to deal with that in the cloud environment because the ability. So for us, our backbone is Microsoft Azure. Our ability to light up Azure data centers in each jurisdiction that has issue, and the tools have gotten to where you can partition and know the data lineage around this and sort of this automated monitoring fashion is making it easy. But I do think you're spot on. There's going to be this ongoing battle of cooler things to do against a backdrop of increased privacy regulation.
Very good. Well, look, I'd like to thank Brad and John for their valuable insights and contributions. I think if I was to summarize the discussion and maybe leave people with 3 key messages, the first would be around digital resilience. It would be the key to success in the tax function of the future. The second, I would say, is leveraging the power of your data. John mentioned it's going to be the new battle around between tax authorities and taxpayers, but it also offers significant opportunities for taxpayers, and I think it'll allow them to make better decisions. I think that the third one's a mindset or a cultural thing is, don't be afraid or overwhelmed. This is a new frontier for tax and finance professionals, but by embracing this agenda, you'll stay ahead of the curve and you'll drive significant value for your business. So, Tom, with that, I'll pass it back to you just to close it out.
Thanks, James. So it just leaves it to me to thank Brad, James, and John for their time today on what I hope you will agree is an area of growing focus and importance. I'd also like to thank you for your time, engagement, and attention this afternoon. It's greatly appreciated. Should you have any follow-up questions, please don't hesitate to contact us. As I mentioned, this is the first in our leadership series. The next webinar is planned for September. Details of this webinar will issue in the coming weeks, and we hope that you will be able to join us again for that. Until then, I hope you keep well. Have a good evening. Thanks.